Blockbuster, GameStop has just released their Q2 earnings. Spoiler alert, if we take a look at the after hours trading, they are down heavy. Uh, this is a company that over the last 5 years has declined from about $40 a share to sitting around $4 a share today. Looking at their earnings release, GameStop's quarterly sales is at 1.3 billion, down about 14% from last year, with comparable store sales down about 12%. The company reported a loss of 415 million during the quarter. Keep in mind, GameStop currently has a market cap of just over that at $500 million. So their loss per share in this quarter is just shy of the current share value, and that share value is no doubt about to drop. If we look a little deeper, the majority of the losses was in goodwill impairments. Back in 2017, GameStop valued their goodwill at almost $2 billion, and since then decreased it down to 360 million. And as of now, they wrote off the entire goodwill, and it sits at zero now. If we take a quick look at their balance sheet, they have 420 million in cash and cash equivalents, and another 400 million in net equity, but the market views them as a sinking ship. They were paying dividends of 38 cents a share pretty consistently, but that dividend was dropped in June, so that would have been just shy of 10%, but it no longer exists. GameStop's bread and butter for years was resale of used games. They are basically a pawn shop for video games. They make about 20% margin on new games, and they were making 40% margin on used games. But with digital games now, they've tried to pivot into selling merch, cell phones, publishing their own games, but nothing worked out. Their current view is that they expected a sales decline at the end of the hardware cycle, but I don't see people picking GameStop over any other online store that will have hardware available. So all in all, GameStop's future is looking pretty dim. Let me know what you think.